Options trading is a complicated topic, but I am going to answer the question, if you were to explain options trading to a 5-year-old, what would you say? Hello once again, this is your Minister of Capitalism, Brett Davison. And if you're new to options trading or just want some help understanding it better, then this video is for you. Today I'm going to give an overview of what options are and how they work in order to get your feet wet with this confusing financial concept. Suppose you're an 11-year-old kid and the teddy bear you want to buy costs $200, but your parents will not let you spend that much money. But maybe someone comes by offering you a deal. They'll sell the teddy bear to you for $200 on July 30th, 2021. The only thing is that you don't know this person. So to bring some trust to the deal, he offers to pay you $10 up front. Now, we have two different outcomes. If the date comes and the guy doesn't show up with the teddy bear, then you get to keep the $10 that he gave you up front and the deal is done. Of course, if this happens, you could always go out and buy another teddy bear for $200. In this case, your cost would be $200 minus the $10 he gave you up front for a total cost of $190. On the other hand, if he comes with a teddy bear, you buy it at $200. The difference is that now your cost is $200 minus the $10 he gave you, bringing the total cost of the teddy bear down to $190. In this example, where the guy had the option to show up or lose $10, he was a buyer of put options. His maximum loss would have been the $10 he paid up front. In this example, you would have been the put writer, the person who sold the puts. You received $10 up front, and you are required to buy the teddy bear at the agreed upon price of $200, no matter what the teddy bear is worth on July 30th, 2021. If the price of the teddy bear went up to $250, you only pay the agreed upon price of $200. On the other hand, if the price of the teddy bear drops to $150, you still have to pay the $200. So your cost for agreeing to this deal would be a price of $200 minus the $10 you received and the value of the bear, which is $150, essentially leaving you with a loss of $40. I hope this brief explanation of buying and selling options has helped you understand the concept of options trading a little better. And if you're wanting to get your feet wet and learn how to trade options profitably, I invite you to join us inside the empiricalcollective.com to receive our exclusive option trade alerts.